What is going on, traders? Welcome back to the Traveling Trader. You guys notice the old school setup back here? For the OGs, you guys remember this old school setup. So before we went to the fancy cameras and whatnot, we had this setup right here. I was feeling a little bit nostalgic. I said, hey, why not bring it back for today? We also had an extremely fun live stream this morning. It's been a while since I did a YouTube-wide live stream. I usually do it with the Discord members every week or so, but today I just felt like going out to the entire YouTube community. It was really fun. You guys asked me a bunch of hilarious questions. But before we get too carried away and off topic, in this video, I will be discussing obviously the market situation, give you my analysis, and also talk about 5 stocks that I'm looking to buy the dip on right now. There are some extremely great opportunities in the market. The market is presenting some good discounts on some blue chips as well as some growth potential stocks. So make sure you stick around to the end to catch all of my trades. If you get anything out of this video, you know the drill. Leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you're trading. And if there are stocks that didn't make the list, tell me which ones you are looking at and put them on my radar. Obviously, I have to give the caveat that there are way more than 5 stocks, but I cannot make this video 10 hours long. So for the purposes of this video and for brevity, we will talk about 5 stocks. Okay, let's start with the indexes. If we look at the indexes, you'll see the Dow Jones is the one that's hurting the most, down 1.55%. NASDAQ down, the S&P down 0.5%, NASDAQ down less than 0.25% so far. Now, if you've been following the conversation on the Discord, you know that the Dow was the one that I was focused heavily on because this is the one that continued to make all-time highs day after day. If you take a look at the mix of stocks in the Dow, it makes sense that this was the index that was benefiting the most from the reopening narrative. Not only does it include behemoths, mega cap behemoths like Apple, Microsoft, Salesforce, IBM, Intel, etc. It also includes banks like JPM, Goldman Sachs, as well as credit card operators like American Express and Visa, some retail plays like Nike, McDonald's, and Home Depot. So it's a great mix. That's why it's called the industrials average. I mean, that is an outdated term, but it's a great mix of companies and sectors. It is also price weighted and not market cap weighted. But if you take a look at the Dow is just making highs time and time again. Even while the NASDAQ corrected, the S&P was showing a little bit of weakness off and on, but the Dow was the one that was consistently making all-time highs. So I saw this bearish divergence here, which is a very technical term, but it's when the RSI or the momentum indicators are diverging and not making the same pattern as the price. It's showing weakness, that this price incline actually is coming with weak momentum. So I saw that. I saw the fact that it was overbought, and I hold a lot of Dow Jones stocks. This is why in my market update yesterday, I said I was buying the 340 puts on the DIA, which is the ETF that trades against the Dow, to hedge against my stocks. So a hedge is exactly what it sounds like. If you hold a lot of stocks in a certain index, you can hedge against it using options. This is what options were created for. And I think there is a large misunderstanding about what options are. Yes, you can trade options in a very speculative manner. Yes, you can mimic gambling with options, especially if you're playing weekly options. Just like, you can use a knife to make a nice and splendid dinner, but you can also use a knife to kill somebody. Same thing. Even with stocks, you can mimic gambling by day trading penny stocks, for instance. But not all options trading is speculative or bad. You can use it to hedge against your portfolio in the same way that you would hedge using gold or some other sort of currency. This is one of the few things that in that rebuttal to my Palantir video, a certain YouTuber who was respectful, but he basically painted me as an options trader, which I am. I do trade options, but I'm not solely an options trader. And his understanding of options, at least from that video, was that options were mainly used for short-term speculation, and they are not. You can actually buy leaps, which are dated 2-3 years in advance. You can also use options to hedge against your portfolio in a downturn or in a stagnant market. Options really came from futures, and futures allowed farmers to hedge against their crop when they thought that there might be a bad year or an exceptional year. They wanted to lock in prices for the future. Anyway, that's another story for another video, but that's where options comes from. So yes, you can use options in a speculative manner, and a lot of people do, but you can also use options to benefit you if you are a long-term investor. And I'm surprised that a lot of people who've been investing for a long time really have that misconception about options and don't really factor it in as also part of a long-term strategy. Okay, so back to the markets. I do think that this May choppiness will continue. Now, whether we see a correction or not, I'm not Nostradamus, nobody knows. But if we did see a correction, I would not be surprised, especially because the Dow Jones and the S&P have not corrected yet. The NASDAQ has. Now, this creates a lot of great buying opportunities. We bought TTD for less than $500 today. I think this is one of them. I'll talk about these in a second. I want to address one more point about selling for a loss, right? The fact that, oh, you only lose if you sell. A lot of people are holding very risky speculative stocks. You can think of QuantumScape, Nikola, SPCE, Fubo, Skills, etc. And while I've traded these and while I've also invested in these before, there are times when you have to recognize that the landscape is changing and rotating out of risky stocks into more quality stocks. Like if most of your portfolio is not made up of quality stocks, right, and most of your portfolio is made up of these risky stocks, there is nothing wrong with rebalancing your portfolio by selling some of these stocks that you are holding at a loss and rotating them into more quality stocks that are currently also at a dip and probably better for you for the long term. There's no problem with that. This mentality regarding, oh, you only lose if you sell. While technically true that you're locking in your losses when you sell, if you're selling with the intention of reinvesting, people do it in life all the time. When you have an old car, you might sell it and invest in a new car. Same thing with houses or whatever. You know, if you're holding Hyliion, which is currently trading at $8, and this used to trade near $60, and you have a chance to rotate out of it into something like Palantir, which was trading below $20, then yes, you could certainly do that. And you should not feel bad about doing that as long as you do your due diligence and you know why you're rotating, as long as you have a high conviction about the things you're rotating into. But there's nothing wrong with that. The chances that Hyliion will ever see $60 again is very slim. A lot of people have this idea that, oh, stocks will always go back to their all-time high. No, for those of us that lived through the dot-com bubble, for those of us that lived through 2008, we know that sometimes stocks do not go back to their all-time highs. And if they do, sometimes it might take years. I remember some stocks from the dot-com crash took 10 years to recover back to where they were during the height of the dot-com boom. You know, is Nikola going to get back to, what was it, $93? It's currently trading at under 12. Is it going to get back to 93? Probably not. And I just want to show you this excellent graphic that I found on TradingView one day. I apologize. I don't know who to attribute this to, but there's this graphic that I found on TradingView and I screenshotted it because mathematically, I don't think people understand what it takes to make up for losses. So if you're down 40% on a stock, for instance, you need the stock to rally by 67% just to get back to your entry point. That is insane. And it gets exponentially worse, obviously, as the losses mount. So if you're down 60% on a stock, it doesn't mean that the stock needs to regain 60%, which is crazy in and of itself. It doesn't mean the stock needs 60% to get back to where you bought it. You will need the stock to rally by more than double, 150%, just to get back to where you bought it. So take this into consideration when you're holding these bags of stocks that are down 50, 60, 70% on non-high conviction names. If you are still convicted in that stock, yes, sure, dollar cost average, hold it, do whatever. If it's a high conviction stock for you and you're being honest with yourself. But if it's a stock that you know will likely never see the light of day again, or the chances are very slim, and there is something else like a Palantir or an AMD or an Amazon or whatever that is currently at a major dip, rotating out of a crappy stock into a more quality stock is not locking in losses. You are reallocating your resources to improve your portfolio for the long term. Just keep that in mind. Obviously, do with this what you will. It is up to you. I'm just rambling and trying to provide a little bit of education based on my experience. Okay, so now let us get into the top stocks, the top 5 stocks to watch right now to buy on the dip. Number 1, we'll go with the recent topic of conversation, a stock that I apparently have a controversial stance on, Palantir. All I was saying was, yes, I am bullish on Palantir. I just think that $1 trillion valuation is lofty. It does not mean that the stock is not good to invest in. I own Palantir. I sold cash secured puts on Palantir. That is a bullish position. A lot of you inexperienced traders were writing me in the comments saying, oh, you have puts on Palantir. No, I don't. I sold puts on Palantir. That's the exact opposite position, meaning I'm bullish on Palantir to remain above a certain price point. And if it doesn't, then I'm obligated to buy Palantir shares at $17 or wherever my sold puts were. So There was a little bit of misinformation, you know, it might be an honest mistake, but anyway, Palantir I am bullish on. They just tore through earnings this morning at the time of this recording. You see this bullish engulfing candle up almost 8%. Still under 20 bucks, still a great buy under $20. Just because I don't think it's going to be a $1 trillion company does not mean that the company doesn't have insane growth potential. As a matter of fact, I did a video saying why I think Palantir could actually double in value. And I did this video months ago. The revenues are growing all around. Their commercial revenue is up 72% on the year. US government revenue, which makes up a good chunk of the revenue, is up 83%. Their cash flows were up $404 million on the year, which is just astounding for a company that has a market cap under 40 bill. Between now and 2025, they expect annual revenue growth of 30% or greater to continue. That's for the next 4 years. So things are on the up and up for Palantir. And I think under $20, as I said in my last video, I think the fair value between 20 and 25 bucks, even if it's conservative, the fact that Palantir is trading under $20 should alert you that for the long term, it is a solid price point. Stock number 2, not a surprise, AMD, sitting at the 300-day moving average at long-time support, going all the way back to summer of 2020. Obviously, these big chip companies they're reeling from the chip shortage problem. But mark my words, when that gets solved, these chip companies are going to go flying through the roof. So anytime I see these companies at a more than 25% discount, happy to pick it up for the long term. These are long-term positions here. If I ever do a swing trading video, I will make sure to announce it in the beginning that, hey, this is a swing trade. These are long-term positions here. And if you want access to all of my trades, my long-term investments, my swing trades, the crypto trades, the options trades, including the hedges that we opened, were up 100% on the Dow Jones hedge. Link is in the description below. A lot of people won't even teach you how to hedge your portfolio because they don't know how to, right? There are certain things that you could do in times like this to protect yourself a little bit more than just sitting on your hands and watching your portfolio dwindle away, which there's nothing wrong with it if that's what you want to do, but there are ways to mitigate downturns in the markets. All right, stock number 3. This is a little bit riskier here at this price point, but TTD fell from a price of almost $980 all the way down to 460 bucks thereabouts. It was a major overreaction, and they even beat earnings, but it was a major overreaction. They also have a stock split coming up in June, I believe June 17th, and they're doing a 10-for-1 stock split. And we usually see prices of companies, especially bullish companies, rally leading into the stock split. I'm happy dollar cost averaging on TTD here, but I wouldn't go overboard. Just, position size accordingly, do your due diligence on it. If you don't like it, you don't have to get into it, but it is a profitable company with healthy earnings, a great price point, almost half of its value from the highs that it hit in December 2020, and they're doing a 10-for-1 stock split coming up. All right, stock number 4 is Walt Disney. Now, Walt Disney reports earnings on May 13th. I would actually wait. You have a couple of days to wait. I said this in the live stream this morning, but earnings is an information gathering event. I know a lot of people like to play earnings, and sometimes I do too. I like to play it as a binary event using options or whatever. It's fun, but really earnings are an information gathering event for investors. And what you're trying to do is see what the company provides in terms of guidance. Obviously, we want to look at their numbers, but what is their vision for the company for the next quarter? That is what we really want to see. And I'm bullish on Disney on any sort of weakness, but I would wait until they report earnings later this week and then establish an investment there based on what they say. And the last stock that we'll take a look at is in the cannabis sector, Tilray. We see this a lot, right? When certain industries are hot, like SPACs or EVs, other industries like solar or cannabis that also have a lot of hope for the coming years, they might take a hit or take a back seat at least while those industries that are now being focused on by the market rally and vice versa, right? So I think that there was a lot of hopium about cannabis after the inauguration, and then that sort of hope died down. Now, Tilray merged with Aphria to become, I believe, the largest or the second largest cannabis company traded, and the merger has gone through. We are now sitting at $15.31 at the 200-day moving average. This is still obviously unproven. it still is based on legislation by the states, by some states, as well as by the federal government. But I'm happy to pick up Tilray here at the 200-day moving average, just sitting sleepily at the $15 range. I would potentially set a stop limit maybe at the $12 range just in case we see a drop, or I may dollar cost average into it. But I like Tilray here, especially after the merger with Afria, when it was trading at almost $67 before the merger with Afria. Another cannabis company is Sundial. Sundial is also sitting here at the 200-day moving average and the S1 pivot. Sundial also reports earnings after market close today, so you could afford to wait, see if there is an overreaction, and then buy the dip on Sundial. Sundial being a penny stock, a lot more riskier than Tilray, just giving you some ideas for those who want to engage in a little bit more risk. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of these picks and what your picks are. Always curious to hear from you guys. If you want to join the live streams, if you want to be a part of the trade alerts, part of the community, link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.